Gang.com or give us a call at 877-600-GANG. The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
Yes, the Fed is responsible. You can't have that distortion and financial bubbles without a Federal Reserve printing money, because this sends a bad message. It pretends that there's a lot of savings. They manipulate interest rates, and people do dumb things like they overbuild or overinvest, and it's contagious. And then the market says it's really out of the whack. You can't sustain this debt. It eventually eats away at production, and you have to correct things. So what the market wants is the deflation. They want to get rid of the bad debt and get rid of the bad investments, but nobody likes that because politically that's not acceptable.
And he's correct. And you do dumb things. Do you know that the average now, every year up to quantitative easing, up to when we had the lowest interest rates in easy credit, going back to 2000, 2001, we were building new homes at about a rate of 600,000 a year. Okay? Do you know now it's 1 million? I mean, then when they put in the low interest rates, easy credit, it doubled. That's what he's talking about, stupid. So they turn around after 9/11, they decide, first of all, going back to 1992, they originally changed the rules where they made Freddie and Fannie in the 1992 rule, where affordable housing rule, where they said to Fannie and Freddie, okay, no more are you just going to buy great loans that have AAA rating, good people, never miss a payment. No more of that. We want you to buy loans of the poor, people that hardly can make a payment. Some people can't even make a payment. You have bad, terrible credit. That's what we want you to buy because it's only fair they have a house too. And they were forced to change that rule. Now that was in 1992. Then as we started to move towards 2001, then things got even more aggressive with lowering the credit standards in easy money. And that's when we went from 600,000 new home construction every year to 1.2 million. Can you imagine that? It was all because of easy credit and all kinds of money available at low interest rates. So now we have this situation that we went down. It was a week ago that the market started to drop. Just a week ago, we dropped 1,300 points. After Friday, 500 points, 1,900 points. And immediately, bam, it turns right around. The S&P turns right around. The Dow turns right around. I mean, it was incredible to watch it turn. I mean, it just shot straight. It hit. If you take the S&P, it hit 182 on the S&P, touched it, and then shot straight back up to 197, then shot back down to 190 and settled out. And I told you why. It was all because they wanted to help the banks, and the plunger team wanted to help the banks, and they wanted to help the hedge funds. Because the hedge funds, remember, they borrowed. There's five of our largest banks. They lend out about $35 billion each to these hedge funds since November 2008 to go and buy stocks. And then, boy, they got hit. And when that market dropped like a rock, they had to start liquidating their positions because they had margin calls. So as I told you last week, that was why this whole market stopped. This market was going to go down at least 20 to 30% until they came in and they interfered and stopped it. And they did that to save the banks and save the hedge funds, because it's all about the hedge funds. Can you imagine the losses these banks would have taken? They were loaning out $35 billion each. J.P. Morgan, Goldman Sachs, Citi, Wells Fargo, and Bank of America. Those are the 5 major banks, and you imagine what next quarter would look like? It'd be a disaster. But how long can they do this? This is what Ron Paul's saying. How long can they keep doing this? So right now we have they brought the market right back up to almost where it was a week ago when this whole thing started, or last Friday when this whole thing started. But it's amazing. It's just when you sit and watch this, and now you're getting all the cheerleaders coming on. All the cheerleading's coming out. Like it was a nothing happening. I mean, it was like it didn't count. It was like a hiccup. It didn't count. So listen to this nonsense that we start hearing.
Why the big ups and downs over the last couple of weeks? How much of it is as a result of the big sell-off in the Chinese markets? And how much of it is just the normal correction in a bullish market that is 6.5 years old?
I think it's more the latter than it is the former, Chris, because many of the problems that are being blamed for what happened in the market last week are not new problems. The crash in commodity prices, the weakness in China's growth, uncertainty about Federal Reserve policy here in the United States. These are not brand new factors. So I would consider them more the straws as opposed to the causes. I think the market had gotten a bit overbought. There was too much enthusiasm, a lot of complacency. It had been a long time, almost 4 years since the last.
Oh, that's not why it happened. I couldn't believe it. I was listening to her on TV this Sunday. Her name is Liz Ann Saunders. I couldn't believe what she was saying. I said, what a spin. Oh, I see. The market dropped because we just been, it's the same problems. We're not sure if the Fed's going to raise rates or not. And the market may be a little overbought. China, we're worried a little bit about their growth. These are the same things. But what just happened to do that last week? Just happened to drop 1,900 points. That's not what happened. Not at all. It's the policies of this administration that caused this to happen. That's what happened. It's the policies didn't work. Let's go back and take a look at why this didn't work. The real problem is, look, they keep talking about this GDP growth. Now, they started the market, when the market was collapsing a week ago today, they came out with the GDP for the second quarter, so we revised it upward from 2.3 to 3.7. This was going to be a way to try to stop the market from going down. This is how they interfered. So they said, oh, we made a mistake. Our economic growth wasn't 2.3, it was 3.7. And how'd they get that? They manipulated the inventory numbers. Oh, I see. So now we're going to stop the market from going down because we had a GDP of 3.7 instead of 2.3 for the first quarter. Were you nuts? They manipulated the job number. They manipulated the inventory numbers just like they manipulate the job numbers. That's not what happened. That's not why the market stopped going down. But my point is, it's not the GDP. The problem is the market collapsed because it was a signal that this economy is sick. The real economic growth for Main Street comes from savings, capital investment, and good paying full-time jobs. And we don't have none of the policies that this administration put forward helps with any of that. That's the problem. That's why the market collapsed. So just like Ron Paul said, you can keep printing money, and keep propping the market up. That's all they've been doing since November 2008, propping it up with stock buybacks, propping up with everything, propping it up. But what caused the failure is the economic policies have not worked. If you go all the way back, we keep hearing how the real stimulus was $800 billion. Remember that? The real stimulus, $800 billion, they're going to put in the market. Or they're going to put in the economy, $800 billion. That's a lie. Try $4 trillion, and it didn't work. We put $4 trillion in our economy, and it didn't work. Our GDP is just 2%. We're still 2 million jobs. We have 2.4 million fewer jobs than we had the day Obama took office. And that $4 trillion included, and I'll tell you why the stimulus didn't work. The $800 billion did not go to the right place. Just like these tax cuts, they give tax cuts. The problem with the tax cuts, they go to the wrong people. They give the rich the tax cuts, and with the extra money they make, because they don't have to pay taxes, they don't spend it. They put it in a pile with the rest of their money. How about giving these tax cuts to labor? Let's take away the payroll tax. Now you watch this economy turn around. Hey, we'll be right back. Phil's Gang, 15 past the hour in Phil's Gang.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. At philsgang.com, we promote core technicals and chart analysis that enables each Philsgang member to be the best investor they can be. At philsgang.com, stock investing is defined in detail by the Philsgang standards. Working together, we achieve our goals and ultimately provide a truly unique profit-taking experience for our members. This is what philsgang.com does, and no one does it better than the off-the-Wall Street maverick, Phil Grande. For over 15 years, Phil coaches and teaches that stock investing diversity goes beyond fundamentals and stories. We believe that amazing things happen when people invest in themselves by following Phil's format and recommendations. At philsgang.com, we believe in the desire to embrace, build, and deliver on our core values and promises. And for over 15 years, Phil Grande has delivered on that promise. For more information, go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264. At philsgang.com, we promote core technicals and chart analysis that enables each Philsgang member to be the best investor they can be. At philsgang.com, stock investing is defined in detail by the Philsgang standards. Working together, we achieve our goals and ultimately provide a truly unique profit-taking experience for our members. This is what philsgang.com does, and no one does it better than the off-the-Wall Street maverick, Phil Grande. For over 15 years, Phil coaches and teaches that stock investing diversity goes beyond fundamentals and story. Stock Corner is brought to you by the Phil's Gang video channel. Go to philsgang.com, click on the video channel graphic, and check out Phil's free videos on the market, economy, and current events.
And welcome back to Phil's Gang. And again, we're going to take a look at this real economy, the stimulus, what caused this market to drop, what's going to happen. But first, let's get to some money-making ideas. And I'm going to show you something. This was interesting. Listen to this guy on CNBC. He talked about how everybody was confused. And here, well, just listen.
First of all, let's be honest. I became bullish of crude oil for the first time in months and months and months, Friday of 2 weeks ago. I never expected to see the kind of action that we saw in the capital markets on Monday of last week. That certainly caused a great good deal of confusion, took me out of being bullish. I was 24 hours too early.
Okay, but let's take Phil's Gang. Go to my site right now, philsgang.com. If you have a mobile device or if you're in front of your computer, and I'm going to show you the difference between being with these money advisors.
What's a financial advisor?
That is a term that means almost nothing. It is somebody who might be a financial planner, or it could be a broker who is really a salesperson.
The vast majority of so-called advisors, around 85%, are not fiduciaries.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
And that's correct. And most of them don't have any talent. The talent money guys work for the big hedge funds. They work for pension funds. That's where the talent is. Your 401k money manager, he has no talent. He's a real loser. They're the guy. They pick these guys up a dime a dozen. These guys who work for the manager 401k. The pension fund, that's where the real smart guys are. And the hedge funds, if you're smart, that's where you want to go. That's where you make money, because you make money based on your performance. So you share in the profits. You also share in the losses. But these guys are so good that they very seldom have losses. They mostly have profits. Because remember, they short at the same time like we do. We short stocks like we did this last market crash of 1,900 points. Remember, I had my gang, and you can check it out. I had my gang short Schlumberger down 22%, and Goldman Sachs down 18%, and Intel down 20%, Caterpillar 18%, IBM 16%, NSC down 21%. Cut those all in half. Let's say we by time, because not all students get in at the same time. So let's cut it down to an average of 11%. 11% return. So I'm cutting it almost in half. And how do we do that? We did it by watching the institutional money pull out of the stocks. Now, let me give you an idea what he said. He turned around and he said that he bought oil. He was about a week too early. Now, look where we bought oil. First of all, for our traders, we have a 10% return. I had my traders put in an advance order this Friday. Hear what he said? He bought his 2 Fridays earlier. Why would you do that? My charts show the institution started to put money in Friday, last Friday. So we bought around $8.38. We have now about a 10% return. He lost, and he's discouraged now, but we had a return. Now here's what's even better. Let's say you don't have time to trade, meaning you don't have time to swing trade where you're in a stock from 2 to 6 days to 10 days, but you're a long-term person. Look at my PT2. Not only did PT2 tell us when to get out of oil, look right here. On June 23rd, it told us to get out. The institutions are pulling them out. I'm sorry. It was June 25th. It turned from green to red. It dropped from $12 all the way down to $7. $12 to $7. But we are out. And that's a 41% drop. Now, think about this. But my members who have the PT2, the minute it turned from green to red, they turned around and shorted it. So that's a 40% drop. Cut it in half, 20%. Cut it in half again, 10% return. We'll cut it in half twice. It's 10% return. But here's the key. It just turned green today, not Friday. This is for my long-term investors. Okay, these are position players. They go in and they're in for anywhere from 2 months, 6 months. And look at this. It just turned green today. And now it started to go up at $7. That was on the 26th. And then it went up to around 773 the next day. And then on Friday it went up to around 830. And today it turned green. It turned green around 828, 830. Turned green. How you like that? So you don't buy it yet today because we teach you wait for one more day to turn green. If oil turns green again tomorrow, that's a confirmation. So let's say you buy it at $9.50. You're going to put your stop right under $8. So you never can, when it pulls back, when it hits that $7.84, you're out. You can never lose more money than that. Whether you got 25 shares, 50 shares, 100 shares, you're guaranteed out. So you lock in, you know exactly what your loss is going to be. But you're way ahead of everybody else. So you heard what he said. He's confused, didn't know what to do. And this is a money manager. We knew exactly what to do. So check it out. Go to my site, philsgang.com, and you'll see that we knew exactly when the institutions were pulling their money out on, as I say, around June 24th. June 24th and June turned red, actually June 25, okay? And it turned green today. But for my traders, they got in on Friday. He said, I got in too early. I got in too early. Well, you wouldn't have got in too early if you're with us. You would have got in just right. Okay. So, again, the market's down 131 points today. So the market's, after this big rally, remember this big rally, because the rally, again, was propped up. They propped this. We were going to have about a 20% loss. They kept it to 10%. By making sure that the hedge funds and the banks were protected, that when the margin calls came in, that the plunger team said to the banks, call your hedge funds, tell them don't liquidate anymore, buy their shares back, because we're going to print money, the Federal Reserve, we're going to give it to the 5 largest banks, and they're going to go in and buy Starbucks, Apple, Disney, Nike, Twitter, and Boeing, and Facebook. Those were the leadership stocks. And those stocks went all the way back up to where they began. And if you were a gang member, you would have participated in that. Join my gang tonight, philsgang.com. If you do well, just give a little money to St. Jude. Hey, we'll be right back. 28 past the hour here on Phil's Gang. A lot more.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. What is Phil's Gang? Phil'sGang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264.
Why aren't you using the spiders? Why are you paying 63% of the money you saved as a fee? 401k, you are paying in fees 63% of the money that you saved. That is crazy. Why don't you switch to the spiders? Join my gang, Phil's Gang, and do what millions of people do. Use the spiders. 500 best stocks in the world.
Find out more at philsgang.com or give us a call at 877-600-GANG. 877-600-4264.
You should expect that your advisor is going to make outbound calls to you. Yes, we make outbound calls to all of our clients at least twice a year.
Twice a year? I hear my ex-wife call me more than that. You nuts? Twice a year? And she's not managing my money. Are you nuts? Twice a year? You're sitting there and the stock market's going down 1,300 points on an open, and you're hoping he calls you? No, that doesn't happen at Phil's Gang. At philsgang.com, we have technology so that we're in charge of our stocks. We're in control. We don't call these crashes. We call these corrections. Look, join the gang, Phil's Gang. Be part of our gang. Be part of a correction, not a crash, using our technology. Join my gang, philsgang.com. It's only $49.95. That's philsgang.com, $49.95. See you on the charts.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264.
You should expect that your advisor is going to make outbound calls to you. Yes, we make outbound calls to all of our clients at least twice a year.
Twice a year? I hear my ex-wife call me more than that. You nuts? Twice a year? And she's not managing my money. Are you nuts? Twice a year? You're sitting there and the stock market's going down 1,300 points on an open, and you're hoping he calls you? No, that doesn't happen at Phil's Gang. At philsgang.com, we have technology so that we're in charge of our stocks. We're in control. We don't call these crashes. We call these corrections. Look, join the gang, Phil's Gang. Be part of our gang. Be part of a correction, not a crash, using our technology. Join my gang, philsgang.com. It's only $49.95. That's philsgang.com, $49.95. See you on the charts.
For more information, go to philsgang.com or give us a call at 877-600-GANG. 877-600-4264.
Some girls wish to grow up and be a princess. Other girls wish to simply grow up. May and Bailey are friends battling kidney cancer at St. Jude Children's Research Hospital. We developed a treatment for their cancer that's helping kids like them across America.
You know what I wish for?
What's that, honey?
My hair back. And no more cancer.
Well, girls, St. Jude is working on that.
Donate now at stjude.org or shop wherever you see the St. Jude logo.
At philsgang.com, we promote core technicals and chart analysis that enables each Phil's Gang member to be the best investor they can be. At philsgang.com, stock investing is defined in detail by the Phil's Gang standards. Working together, we achieve our goals and ultimately provide a truly unique profit-taking experience for our members. This is what philsgang.com does, and no one does it better than the off-the-Wall Street maverick, Phil Grande. For over 15 years, Phil coaches and teaches that stock investing diversity goes beyond fundamentals and stories. We believe that amazing things happen when people invest in themselves by following Phil's format and recommendations. At philsgang.com, we believe in the desire to embrace, build, and deliver on our core values and promises. And for over 15 years, Phil Grande has delivered on that promise. For more information, go to philsgang.com or give us a call at 877-600-GANG. That's 877-600-4264. What is Phil's Gang? philsgang.com is a subscription website service that host Phil Grande has been teaching and providing daily stock investment recommendations for over 15 years, all in the name of making its customers educated investors and helping the kids at St. Jude's Children's Hospital. If you want to take charge of your financial future, then do not wait any longer. For only $49.95, become a Phil's Gang member today. Go to philsgang.com or call 877-600-GANG. That's 877-600-4264. Welcome back to the Phil's Gang Show. This segment is brought to you by Phil's Talking Trader Stock Charts.
And welcome back to Phil's Gang. Remember, for my Tampa, Florida, Sarasota, Florida, St. Pete, Venice, I will be speaking tomorrow night, Tuesday, September Now, I've got to tell you, this just drives me nuts. So listen to this. Listen to what she says here, this Lizanne.
What do you expect the Fed to do? Will they raise interest rates come mid-September?
Right. So, Chris, the voting body is called the Federal Open Market Committee, and we've been jokingly calling it the Federal Open Mouth Committee because there are so many disparate views being expressed right now, and I suppose it doesn't help in terms of confidence on the part of the public, and I think that's one of the factors. But what's interesting about this week, and it particularly relates to what the Fed may or may not do at their next meeting in September, is that maybe lost because of all the headlines around market volatility was the fact that we got some very good economic numbers. GDP for the second quarter was revised up comfortably above 3%. Every category, from government spending to consumer spending to investment to housing, was stronger. And then you had a lot of other...
Not true. Not true. In fact, consumer spending, she said, right? Consumer spending, it advanced at its lowest, is the slowest pace in 4 months. So how could she say that? Also, if you look at investment, there's no investment going on. Try to get a small business started. Try to borrow money to buy machinery or get a small business going. Or if you have a small business, get a line of credit. Try it. Nearly impossible. Why? Because when they drop interest rates to 0% at the banks aren't getting a lot of savings. And where are these savers going? Instead of putting their money in the banks, they're putting their money into treasuries. So the banks don't have enough money, or they're not. First of all, if they had enough money, they're not going to loan to you. Because remember what Bernanke and Aunt B, who took over, told the banks: do not loan to Main Street. Take and loan the money to hedge funds. Let them keep buying stocks. And in November 2008, they told the banks, when they gave them all this money, don't you dare loan to Main Street businesses or housing or commercial property. You go out and you buy commodities. You yourself buy commodities, because there's going to be a big surge in commodities because of what China's doing and building all these cities. And then you take the rest of the money and you give it to hedge funds, because we're going to move the stock market up. We're going to prop it up. We're going to prop it up 180%. So make sure these hedge funds, you're each going to get $35 billion each. The 5 banks, give it to these hedge funds. And that's what happened on, as you said, on Monday, when they started to liquidate. It started to just get out of control until the plunger teams, stepped in. But let's go back to what she's saying, how everything is really, really good. It's not true. The failure of this administration, the economic policies. We put not $800 billion in, we put $4 trillion in. $4 trillion. Where does $4 trillion go? They wasted it on welfare. They took a lot of the $4 trillion, they spent it on agricultural housing. The agriculture housing bill. Let me explain. They took this money and they said to developers, for the farmers, let's take the farmers, we will loan to you a 50-year mortgage at 1% interest. You go in these rural communities where the farm workers are, and you build these apartments so they can get in there and they can pay very low wages. And that way we won't have the agriculture, the farms, the industry pay for it. So we'll give you the money, developers, 1% interest for 50 years, and then we subsidize these apartments. You and I pay 40%. 40%. A guy goes in, he rents for $200, we pay 40% of it. That's where the $4 trillion, that's not stimulating the economy. That's welfare. Then they also said, look, go to these rural communities for the poor, people who can't afford a house. We'll give you a 33-year loan, 1% interest, and go build housing, apartments for the very poor, So that's where a lot of the $4 trillion went to. Plus, don't forget, the other part of the stimulus was the TARP. Obama got $250 billion of that. And that didn't go in helping. They didn't refinance anybody's mortgages. Remember HOPE and HARP and the HAMP program? They never did that. They did it on a limited basis to make it look like they did. How about cash for clunkers? More went to cash for clunkers. Are you kidding me? Now, where did the bulk of that money go to? A large portion of the money went to the Democratic governors to thank them for helping Obama get in office, his first term. He wanted to thank them. And he wanted to thank the police, the fire, the teachers, all unions. He wanted to thank them. At that time, all the Democrat governors, they were cutting their budgets, and they had to lay police off and teachers off and so forth. So what did we do? So what did Obama? He took the stimulus. That's not stimulating. He sends a check to all these governors and say, here, we'll take care of your payroll for you. And because I want to thank you for supporting me, helping me to get to the White House. And I want to thank the teachers, the police, and the fire, the unions, for helping me get into the White House the first term. So none of that money went anywhere that would stimulate the economy. It didn't go to building businesses. It didn't. Isn't that ridiculous? So what is she talking about? That's why we're at a 2% GDP. That's why they had to rig the GDP and say, oh, we got to get the stock market back up on Thursday here. We better or Tuesday, Monday rather. We got to get this market back up. We better do GDP. We'll say we missed some inventory. Look, and she says consumer spending. No. Consumer spending is not going up. It says right here, consumer spending advanced to its lowest pace in 4 months. But let me tell you how this consumer spending. Anytime they tell you consumer spending went up, they're not telling you the truth. Consumers are not purchasing more goods. In fact, they're purchasing less. What is going up? See, they measure it by price. So as price increases, you go to supermarket lately? When people buy stuff, they're paying more out of their pocket for the same goods they bought a month ago, but they're paying more for it. So it looks like, hey, consumer spending is increasing. It's not increasing. Prices are increasing. It's unbelievable how they play with these numbers. It's unbelievable. That's why we were at 10% on our oil, where this guy was 2 weeks too early and he lost money. We were right there. We nailed it exactly at the right time. And that's why you should become a gang member, so you learn not only how to buy these stocks at the timing that's correct, when institutions are pouring money into these stocks, but how about making money when the institutions are taking their money out? Because stocks drop 10 times faster than they go up. Why don't you enjoy that? Learn how to do that. And I'll show you how. It's easy, especially with the PT2 chart. So the reason that this crash happened, this 1,900 point drop, was because of these policies I just explained. The housing for farm workers and the housing for the poor and all this crap. Look, it's like the tax cuts I said a moment ago. If you're going to cut taxes, for heaven's sakes, everybody's always cutting the taxes for the rich. Like the dividend tax. And I have nothing against that. But my point is, they cut the dividend tax for the rich, but why don't they cut the payroll tax for the minimum wage? Why don't they get rid of the payroll tax? Can you imagine if they brought the payroll tax down even 0.5%? How fast this economy would start
So you're willing to say that we saw the lows last week?
There's historically, it's interesting. I wrote down before we came in, when you look at the 1998 or 2011 occurrences where the market crashed in a non-recession environment, volatility started to pick up or got above 30 in August. It stayed above 30 on average until October, November. So it's very possible that the market may retest that low. Everybody like me is saying that, so that's kind of blah vanilla stuff. But I absolutely believe, rather than fear that low, that if you do get it, you take advantage of it. So an all-in sig.
Wait a minute, take advantage of it. Think about it. The stock drops. On the 21st was Friday. We go down 500 points. The next day is the 22nd. Okay, Monday, trading day, Monday. It goes down another 13. That's 1,900 points. And he says buy in the bottom. Now, wait a minute. You heard this other guy say he missed the move and he bought oil too soon. And he lost money, remember?
First of all, let's be honest. I became bullish of crude oil for the first time in months and months and months, Friday of 2 weeks ago.
So he became bullish to buy oil on the 14th. We bought oil, on the other hand, because we're watching our chart, and our chart told us when to buy it, and we bought our oil on Friday. This Friday. And that was and it's now up 10%. For my long-term investors, people who are busy all day long, they haven't got time to be looking at a chart or any of that, and they just have to look at the color. Today, oil just turned green on the PT2 because it's telling us now that the institution, see, he didn't know that when he lost money on oil. He got in too early, a week too early. We got in exactly at the right time, and today on my PT2 chart, it just turned green, which is telling you there's enough institutional money buying oil now that we can get pricing power. That's the key. You got to wait. You just don't buy the bottoms. You got to identify the bottom. How do you identify the bottom? You got to identify the institutions that control that individual stock when enough of those institutions put enough money in. Well, how do you know that? There's a pattern. And we made that pattern so simple by taking the PT2 chart and let it change from red to green. And all we ask is wait for 2 days. So we got it today on our PT2 for oil. We get one more tomorrow, then it's a buy signal. So easy. But we had developed the technology, and it works. It works. So go to my gang and join the gang, and also go to my site, philsgang.com, and check it out. You'll see on my site that there's a video that shows how July, we first started shorting the stock market in May when it was at 212. And then my color-coded chart, the last week of July, I have it up. It shows you right on my chart. Go there tonight, philsgang.com, and it shows you when it changed from green to red. It was perfect. The last week of July. Telling me the institutions pulled their money out and for us to short it, and we did. And it went, and it just kept going down. It went down about 12%. So that's what you got to do. Look, there's nothing to be fearful in this market. There's nothing to be fearful. The only thing to be fearful of is these people, these educated nincompoops who come on CNBC, and he's supposed to be these geniuses. Listen to this.
All roads lead to QE. This isn't my assessment. Everybody I talk to, that really gets down to being objective. I just don't think the U.S. economy is really in store in an election year for super negative rates.
Okay. QE, what they're saying, we're going to go back to QE. Let me explain again. When all these stimulus packages were put together, $4 trillion, none of it helped us to grow. But at the same time, they had to hook-wink us into thinking that the economy was doing better, that the unemployment rate was going down from 10%, had to get down below 6% so Obama could get elected his second term. Remember, no president ever got a second term with unemployment rate at 6%. He had to be below it. It was at 10%. So they said, look, we're going to help out all our buddies. We'll put this $4 trillion into everything except the economy. We'll help the unions. We'll help everybody. We'll help the unions. Everybody. Now, QE, they said, well, how are we going to do that? How are we going to give all this money to the unions and give all the money to the governors so they can keep all the union police and teachers and all them on? How can we do all this? And how are we going to get the unemployment rate? No problem. We'll do QE. We'll tell everybody quantitative easing. We're going to print all this money. We're going to put $3 trillion into the stock market to create all these jobs. Now remember, directly in the stock market. Now, it was to replace the 8 million jobs that was lost. It was a total lie. So how did they get the rate down from 10 to 5 point to right below 6? They said, I got an idea. Let's take discouraged workers. We'll take a category called discouraged. We'll take half of them every month and shift them in. The people who are unemployed, let's take half the unemployed every month, shift them from unemployed to a new category we'll call discouraged. Discouraged workers. Those who gave up looking for work, instead of classifying them each month as unemployed, they would be classified as discouraged, so they would not be in that 6% unemployment rate. Yeah, that's what they did. So right before they're going to take everybody's information. If you haven't been looking for work for 4 weeks, they don't count you as unemployed. They count you as discouraged. So this way, instead of the unemployment rate being at 12%, the unemployment rate is 6%. So they rigged the unemployment rate to go from 10 to just under 6 by playing games with this discouraged workers, making sure they didn't show up in the unemployment rate. Even though they weren't working, they just happened to be discouraged. Those who gave up looking for work, and we'll classify them every month instead of unemployed as discouraged. Now, so think about that. So all the stimulus, the $800 billion, the $4 trillion, which include these add-ons of the agriculture housing program, building houses for the farms workers, and the poor out in the rural communities, the TARP money. And then remember, we bailed out Fannie and Freddie too, another $180 billion. We bailed them out. None of the stimulus was to help the market grow. That's why the stock market dropped 1,900 points, because the market was going sideways for 6 straight months. Remember, I kept telling my gang, something's wrong, something wrong. When the market goes straight for 6 months sideways, it will go down the same distance as it went sideways. It will drop, and it did. So we don't have an economy. There's no economy. There's all air under this. There's all air under this. And all this air started, if you remember, with this housing back in 1992 when they changed the Affordable Housing Act. They put in the Affordable Housing Act where anybody could get a house. Anybody could get credit. So what do you do? Well, just understand this. The housing bubble burst, wiped out $6 trillion of the U.S. house wealth. Now, they wanted to claw that back. Well, they only clawed back 4 of the $6 trillion. And don't forget, stocks lost $8 trillion, so you got $12 trillion totally that was lost between stocks and housing. We haven't got much of that back. So the economy is no better now than it was in November of 2008 when they stopped the economy from going down. They stopped the economy from going down by injecting money in the stock market, changing accounting rules, putting in all the stimulus that wasn't stimulus at all, was to help everybody out, all the buddies, all the unions, the governors, everybody got them in office. There was nothing to stimulate. The only thing there was nothing stimulated in this economy. Everybody thought because the stock market was going up, the economy was doing good. Well, that's why they do it. They drive the stock market up. It's all fake by printing money, giving it to the 5 banks to give to these hedge funds to go and put it in the stock market and make a lot of money. They move the stock market up so people would think, wow, things are good.
Our economy has been moving and continues to grow, and unemployment continues to come down. It's why we need to do everything we can in government to make sure our economy keeps growing.
Oh, wait, we're going to continue to do everything we can in government. We're going to continue to take $4 trillion. Let's do it again. And we'll go build more housing for the farms, for the farm workers out there, because like here in Florida, the sugar cane companies, they got more money than God, and so you and I got to build a housing for their workers, not them. Are you kidding? He's going to do more of that, and he's going to give more money to union teachers and police. Oh, he's going to do all that. So let's keep doing more of that instead of putting money into jobs. Hey, join my gang tonight. philsgang.com.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to